Welcome back to your daily pre-market brief for Thursday, July 2nd. Last trading session recap. Wall Street just witnessed a massive tech sell-off as profit-taking swept through artificial intelligence leaders, and Meta platforms sent shockwaves across the cloud computing sector. During the most recently completed US trading session, the major indices were dragged lower by intense semiconductor weakness, following reports that Meta is actively developing its own cloud business to generate revenue from excess computing capacity. This strategic pivot directly threatened the market share of specialized infrastructure providers and triggered widespread algorithmic liquidations across the tech space. In macroeconomic news, the June manufacturing index came in softer than expected, which initially eased inflation fears but ultimately failed to spark a broader market rally. Furthermore, Federal Reserve Chairman Kevin Warsh spoke at the European Central Bank Forum, where he emphasized a firm commitment to bringing inflation down without offering clear clues on immediate interest rate cuts. Consequently, capital quickly rotated out of overextended technology stocks as institutional investors locked in their massive first-half gains ahead of the upcoming holiday weekend. The indices, commodities, and general market mood. The S&P 500 closed down 0.2% at 7,483. The Nasdaq Composite Index fell 0.7% to close at 26,040. The Dow Jones Industrial Average closed flat with a 0.0% change at 52,305. Gold gained 1.3% to close at 4,083. Brent crude oil dropped 1.9% to settle at 72. Bitcoin rallied 2.1%, finishing at 59,955. The 10-year Treasury yield rose 1.3% to close at 4.48%. The VIX Volatility Index climbed 0.9% to 16.59. These major benchmarks reveal a market undergoing a healthy technical digestion as capital actively rotates out of high-flying technology momentum names to seek stability. The direct relationship between the flat major equity indices, an elevated 10-year Treasury yield, and a rising VIX implies that institutional risk appetite is slightly contracting. Smart money is selectively absorbing this pullback and positioning defensively into safe havens, like gold, rather than aggressively buying the equity dip ahead of critical labor data. Top 5 gainers and losers. Filtering out the penny stocks, trading under $5. Top 5% gainers. WTO, time limited, surged 34% to close at 9.6. The consumer technology firm skyrocketed after announcing a massive new global distribution partnership that dramatically expands its footprint across emerging markets. Momentum traders quickly recognized the sheer volume flooding the tape, sparking a relentless intraday short squeeze that forced early bears to capitulate. RGC, Regencell Bioscience Holdings Limited, jumped 32% to close at 8.0. The healthcare company caught an explosive bid following the release of highly positive interim clinical data, demonstrating breakthrough efficacy for their lead neurological treatment. Institutional buyers aggressively accumulated shares as the strong results severely de-risked the pathway to final regulatory approval. ELTX, Alisio Therapeutics Incorporated, popped 31% to close at 5.1. The clinical stage biotech firm rallied after successfully pricing a heavily oversubscribed direct offering led by key fundamental institutional investors. This influx of non-dilutive smart money capital completely validated their long-term oncology pipeline and provided a massive runway for upcoming clinical trials. SKIL, Skillsoft Corporation, climbed 28% to close at 6.6. The enterprise learning company surged after delivering a monumental quarterly earnings beat driven by surging corporate demand for their newly integrated artificial intelligence training modules. The management team also raised forward guidance, which immediately attracted value investors looking for a powerful technical turnaround. ALIT, Alight Incorporated, gained 23% to close at 13.7. The human capital software provider experienced heavy accumulation following structural changes that significantly tightened the tradable float. Technical breakout buyers flooded the order book as the stock broke through key resistance levels, establishing a fierce new uptrend on exceptional relative volume. Top 5% losers of the day. A JLHL, Geelong Holding Limited, plunged 32% to close at 11.1. The consumer discretionary firm suffered a brutal sell-off after missing quarterly revenue estimates by a wide margin and heavily slashing their full-year guidance. Management cited severe logistical bottlenecks and softening international demand, which prompted a cascade of immediate analyst downgrades. SSTK, Shutterstock Incorporated, crashed 29% to close at 9.9. The digital content provider collapsed under relentless selling pressure as investors panicked over rapidly intensifying competition from advanced free artificial intelligence image generators. Major institutional funds rushed to liquidate their stakes over genuine fears of permanent market share deterioration. CHRN, Chronoscale Corporation, dropped 21% to close at 17.6. The industrial manufacturer plummeted following the completely unexpected resignation of a key executive alongside an internal corporate restructuring announcement. The sudden loss of leadership continuity left buyers completely unwilling to step in and absorb the heavy downward momentum. NUAI, New Era Energy and Digital Incorporated, sank 18% to close at 5.2. The energy transition company destroyed shareholder value by announcing a massive secondary stock offering at a steep discount to the current market price. Existing investors fled the stock in droves, knowing the new shares would severely dilute their equity stake and crush future earnings per share. NBIS, Nebius Group NV, slid 17% to close at 229.2. The cloud infrastructure firm tumbled as part of the broader technology sector pullback triggered by Meta Platforms encroaching on their core server market. Following a massive multi-month rally momentum, traders aggressively took profits the moment major technical support levels began to break. Top 5 institutional whale trades. Yet IVA, Inventiva SA call at the 10 strike. Expiring in 198 days with a volume to open interest ratio of 20,010. This massive block represents an aggressive out-of-the-money directional momentum sweep by a leaps speculator positioning for a major pharmaceutical catalyst. The sheer size relative to open interest indicates a whale is establishing a brand new position with high conviction that an explosive fundamental re-rating is imminent. INTC, Intel Corporation, call at the 91 strike expiring in 1 day with a volume to open interest ratio of 13,668. This extreme options print acts as a volatility anomaly, explicitly representing aggressive out-of-the-money directional momentum right before expiration. A whale is targeting an overnight short squeeze or reacting to an expected news drop to capture violent intraday price action. DLC Holdings Corporation, call at the 17 strike, expiring in 170 days with a volume to open interest ratio of 6,739. This concentrated sweep suggests smart money is patiently accumulating a significant upside position ahead of a known corporate catalyst. Categorized as a volatility anomaly, this flow indicates a calculated out-of-the-money, directional momentum play where the buyer is paying a premium for time value to let the bullish thesis unfold. CCJ, Cameco Corporation, put at the 80 strike, expiring in 37 days with a volume to open interest ratio of 4,752. This heavy flow represents an aggressive bear setup functioning as calculated institutional hedging ahead of a major macro event. With the broader energy market showing signs of cooling off, this smart money player is heavily protecting their downside exposure over the next month. BHP Group, limited call at the 30 strike expiring in 569 days, with a volume to open interest ratio of 4,600. This unique trade explicitly represents a deep-in-the-money position rolling setup where the whale is locking up massive equity exposure using leaps. It gives the institution extreme structural leverage to ride a long-term commodity cycle without committing excessive capital to outright shares. These 5 institutional blocks reveal a market heavily divided between aggressive short-term speculation and highly calculated long-term conviction. The intense call volume in healthcare and legacy technology shows that whales are still willing to hunt for specific high beta breakouts. Meanwhile, the heavy bearish put flow on the basic materials side proves that smart money is actively insuring their portfolios against cyclical macroeconomic downturns. The massive divergence in expiration dates shows that institutions are highly tactical with their capital allocation right now. Yeah, to find more whale option trades, try our massive institutional option scanner for free at glsequity.com. Next trading session preview. The next upcoming trading session is Thursday, July 2nd. This morning will be dominated by a massive wave of macroeconomic events as Wall Street braces for the highly anticipated non-farm payrolls report. Because Friday, July 3rd is a US stock market trading holiday, In observance of Independence Day, all critical labour data has been pulled forward by a full day. Investors will be intensely analysing these employment numbers alongside initial jobless claims and average hourly earnings to gauge the overall health of the economy. A hotter than expected labour market could influence the Federal Reserve to maintain their restrictive interest rate policy, which would likely spike Treasury yields even further. With trading volumes expected to thin out heavily ahead of the extended holiday weekend, any unexpected deviations in the morning data could trigger massive price swings across all major indices. The next session earnings schedule. The corporate earnings calendar is exceptionally light as we head into the holiday weekend, but investors will be closely watching LNN, Lindsay Corporation, as they report before the opening bell. The market cares deeply about their specific metrics because their agricultural and infrastructure revenues serve as a major leading indicator for global farming and industrial capital expenditure trends. Aside from this single release, all institutional eyes will remain hyper-focused on the broader macroeconomic labour data to drive the morning price action. Yeah, that covers your market brief for today. So if you found this breakdown helpful, make sure to hit that like button and subscribe so you don't miss tomorrow's pre-market briefing. Trade safe, manage your risk, and I'll see you in the next one.